Assalamualaikum, and again we continue from our previous exercise, that is trial balance. From the trial balance we do the statement of profit and loss accounts and statement of financial position. Now we are in stage 3, so of course the stage 3 will more action will be I put in some more action, so there will be some more items that I put in. Okay, so let us look at the question. Okay, so this is the question, stage 3. We have sales and purchases, opening inventory, return inwards, outwards. We have cash inwards, cash outwards as well. Rental, salary, insurance, discount allowed. Okay, discount allowed is an expenses. So of course we give discounts and we allow the discounts to be made. So of course when we allow the discounts to be made, it is our expenses. Same goes to our carriage hours. A carriage hour is also known as the transportation charges. When we send the goods outside to our customer distribution, we distribute our goods. So that is also considered as carriage hours. Okay, after that we have machinery, office equipment. This is our non-current asset. Bank cash receivables. This is our current asset. Payables is our liability. That is current liability. And loan from bank is our non-current liability, and our capital is equity. So we have our closing inventory of 6,500. Okay, now let's go to Excel. Okay, as usual, I have copied the question. Okay, let's start with the label first. This is I'm using the old RMO, it's restricted movement order. Statement of profit and loss for the year ended 31st December 2020. So I put the RM, this is okay. Okay, start with our sales. Sales is 120,000. And we have, of course, we want to find the net sales. Of course, we need to minus the returns inward, if any. But here we have, yes, we have return inwards. Okay, return inwards, onwards, return inwards. Return inwards, how much is that? 2,000. Okay, 2,000. And okay, so we less our cost of goods sold. Of course, our cost of goods sold consists of opening inventory. So our opening inventory is 6,000. Put here 6,000, and then we add with our purchases. Our purchases is 30,000 minus returns outwards, the things that we return back to our supplier because we don't need them, or maybe wrong specification of goods, so we don't need them, so we take it out from our warehouse. So we have to minus from our purchases. It's not really our purchases. Okay, return outward 3,000. I put minus there, okay, because less, so I have to put in bracket. And then now we have free carriage inwards. So carriage inward is actually the charges that we incur when we bring the goods in. So it's like import duty, like when you purchase a scarf from online. So the scarf maybe cost you 10 ringgit, but instead you need that scarf to be in to be at your house, delivered to you in front of your doorstep. So you need to pay for the delivery charges, the courier charges. So the courier charges is 5 ringgit. Then you take the cost of your scarf is 10 plus 5. So the total thing that you need to pay is 15 ringgit just to put the scarf on your head. So I add carriage inwards. Carriage inwards. How much is my carriage inwards? 4,000. So 4,000. Lastly, minus my closing inventory. Did I spell it correctly? So closing inventory. This is closing inventory at the end of the year. So negative 6,005. So actually, the item inside your cost of goods sold is opening inventory, purchases, return outwards, carriage inwards, and closing inventory. So this complete. So you add and minus all those together. Okay. If you have calculator, you can calculate. If you have Excel, you can do doing by Excel. Negative 1. Okay. So this is my gross profit. So gross profit is from the sales minus your cost of goods sold. So it's 118,000 minus 30,500. So you have 87,500. So that is your gross profit. Okay, look back at your trial balance. Is it you have other income? Because other income is also revenue. So revenue, or the other word for sales will always be at the credit column. So when you have other revenue that is not inside your normal sales, so you can find it at the credit column. So here is sales. Okay, we have taken it and we have put it over here. This 3,000 return hours is not revenue. This is a liability. Liability, this is capital. So there is no other income. So we just move on. Less expenses. If let's say we have other income, so we put here other income first, then we minus expenses. So expenses, starting from the top, is not, sales is not, purchase is not, and okay, carriage outward, just like I said just now, carriage outward is your transportation charges, sending goods to your client. So carriage outward is your expenses. So carriage outward, rental, salary, insurance, and discounts allowed because you spend on somebody. You give the discounts to your client, meaning that you are spending on them. Like, okay, I'm selling to you 10 ringgit, so you pay to me 10 ringgit. Okay, never mind, I give you discount 2 ringgit. So your actual sales is actually 8 ringgit. So I just take it from here, cash outward until discount allowed. I copy and I paste it over here. Okay, so these are my expenses. So I just take 1005 until 2005 for discount allowed. Okay, I sum up all together. Okay, so my total expenses is 83,000. 83,000, 38,000. So my net profit is from my gross profit minus my expenses here. So this is my net profit. Okay, so our net profit is 49,000. So let me do a double line here. Okay, 49,500. So this is your statement of profit and loss. See, step by step we're putting in. So if you have more or other expenses, you just put in and then you get your net profit. Just follow the format. Okay, next we go to our statement of financial position. Okay, for statement of financial position, same like what we did previously, we need to put a label. So RMO is the name of our business, restricted movement order. And what is the type of statement that you are doing? Statement of financial position when as at 31st December 2020. This is the ringgit column. Here I start with asset. Oops. So you have non-current asset. So what are your non-current asset? Okay, so look over here. Of course, asset will always be at the debit side. So we'll look over here from the top. Of course, these purchases, everything, blah blah blah. We have taken all those together and we have put it inside our Sochi or statement of profit and loss. Now starting from here, we have machinery. This is our first asset. So after machinery, we have office equipment. Okay, only two. So machinery and office equipment. So I just copy those and put it here. So machinery is 25,000 and your office equipment is 10,000. Okay. How much is our total asset or non-current asset? Okay, 35,000. And we move on to current asset. So our current asset consists of course, this time I remember because I keep on forgetting my closing inventory. So the closing inventory, you close your inventory at the end of the year or the end of the accounting period. So as at 31st December, this is your closing inventory. So I just put here inventory 6,005, and then the rest starting from here bank cash and receivable is your are your are your current assets. So I just copy bank cash and receivables because I'm very lazy to type. So I just paste it, and my bank is 12,000, cash is 5,000, receivables is 20,000. I just paste it over here. So now let us total up how much is our current asset. So our current asset, the total of our current asset is 43,500. Our total asset from 35 plus 43,500, you have 78,500. So that is your total asset. We move on to finance by, so you have liability. First is your non-current liability. What is your non-current liability? Okay, your loan from bank, 15,000. So I just put here loan from bank, 15,000. Okay. And current liability. Okay, my current liability, I have only one, that is my payables, 4,000. So I just put here payables, 4,000. Okay. Okay, now we have finished our liability. Okay, let's check back. Is it we missed out something? Because it's very simple to detect liability, because liability will always be at the credit column, credit side. So this one is sales, this one is okay, finished already. We have put in our profit and loss. So payables is our liability. We have taken that into account. Loan and equity. Okay, equity is different. Okay, so we have 4,000 and 15,000. So we check back, we have 4,000 and 15,000. Okay, now we go for equity. First is our capital. So our capital is how much? Capital is 10,000. So I just put here 10,000. And then nothing much. Of course, you need to take you add with your net profit. So your net profit, if you have profit, it will increase your capital. If you have losses, your capital will be reduced. Huh? Eventually, you will go bankrupt. So when you have profits, so you will become wealthy or prosper. So net profit is 49,500. So I just take here 49,500. Alright, so for the total liability and equity, how much? So just take all those together and put it here. So I have 75,500. Is it correct? So what's the border? Okay, 70,000. Okay, yes. There we have it is balanced between asset. We have asset equals to liability plus with your equity. So that is the formula. So the formula for financial position is asset should be, this is asset should be equal to L plus E, the liability plus equity. So this is the liability and plus with the equity. So you have the same figure, 70,500, both sides. Okay, so that's stage 3. So we are going for stage 4 later. Okay, so till then, thank you. Bye.